Welcome to Griffonomics.
It is, it's really good to be back.
Today we're doing something a little different. We're not just talking about a stock ticker or a standard company profile. We are talking about an attempt to solve arguably the single hardest logistics problem in the history of science.
That is not an overstatement either.
No, it really isn't. We are doing a massive deep dive into Tempus AI.
And honestly, if you look at the landscape of healthcare technology right now, and I mean specifically right now in February 2026, there's probably no company more complex or more critical to watch than Tempus.
Exactly. And the reason we are looking at them today is because they've labeled themselves something pretty ambitious. They don't call themselves a lab. They don't call themselves a testing company. They say they're building the healthcare OS, the operating system for healthcare.
Which is, it's a massive claim. It's the kind of thing you usually hear from a startup trying to raise their Series A round, right?
Yeah.
Not a publicly traded company.
It is a huge claim. And usually when I hear a company say they're the operating system of anything, I roll my eyes. It feels like, marketing fluff. A slide in a pitch deck just designed to separate venture capitalists from their money.
Yeah, totally.
But we have a huge stack of source documents here. We've got the JP Morgan Healthcare Conference presentation from last month. We have the Q4 2025 earnings call transcripts, their 2026 growth strategy deck. And when you actually look at what they've built, that label might actually be accurate.
It's becoming really hard to argue against it. And I think the timing of this conversation for you, the listener, is vital. Because sitting here in February 2026, Tempus has just passed what I would call a historic inflection point.
Right, the why now factor.
Exactly. For years, this company was your classic high-growth, cash-burning machine. I mean, They were spending money hand over fist to build physical infrastructure.
Buying the sequencers, hiring the data scientists.
Building the actual wet labs. But the Q4 2025 numbers that literally just came out, they flipped the script completely. They moved from burning cash to generating profit. Specifically, positive adjusted EBITDA. And they did it a full year ahead of schedule. Wall Street did not expect it this fast.
So they've graduated. They aren't the scrappy startup asking for an allowance from investors anymore. They are a profitable AI infrastructure leader.
Precisely. And that fundamentally changes how we have to analyze them. It shifts the entire conversation from will they survive to how big is this moat?
So here is our mission for this deep dive. We are going to generate a highly granular investigative report on this transformation. We aren't just looking at the stock price, though we will definitely get to that. We are going to look at the mechanics of the machine.
We need to unpack what they call the multimodal data flywheel. It sounds like a tech buzzword, I know, but it is actually the economic engine of the whole company. We really have to understand the physics of it.
And we're going to look at their backlog, which is currently sitting at a massive $1.1 billion. We'll explain why that number is so high and what it tells us about the pharmaceutical industry's sheer desperation for data.
We also have to talk about the ASP expansion strategy.
Average selling price.
Right. It's a technical term, but it basically just means getting paid significantly more money for doing the exact same work. It's a fascinating business maneuver involving some brilliant regulatory chess.
And finally, we're going to address the elephant in the room regarding AI. Everyone right now is worried about vibe coding, this idea that a couple of guys in a garage can write some code and replace $1 billion AI company. We are going to tease apart why, in Tempus's case, that is probably impossible.
Yeah, it's the difference between software and physics. We'll definitely get there.
Okay, let's unpack this. Section 1, the engine room. If you strip away the AI hype and just look at the business model, what is Tempus actually doing? Because on the surface, it looks like a really confused company.
It really does look like a two-headed monster at first glance.
Yeah.
And I mean that in the best possible way. It has two segments that look totally different on paper, but they feed each other perfectly.
It's two prongs.
Right. Prong one is diagnostics. This is what they call the ingestion engine.
This is the stuff that looks like a traditional medical company, right? Like labs, white coats, pipettes, all that.
Correct. This is physical testing. Genomics. If you have a tumor, your doctor sends a physical sample of it to a Tempus lab. They sequence the DNA, they sequence the RNA, they do hereditary testing, they do MRD monitoring.
Minimal residual disease.
Yes. And in fiscal year 2025, this segment brought in $955.4 million. That is roughly 75% of their total revenue.
Okay, hold on. 75% of the money comes from actual lab tests. But lab testing is traditionally a terrible business model for a tech company.
It is brutal.
The margins are super low. You have to buy expensive chemicals, maintain machines that break down. You have to pay courier fees to ship blood across the country. Why would a company aspiring to be an AI giant get its hands dirty with 75% of its revenue coming from low-margin lab work?
That is the critical question. If you miss this, you miss the entire thesis of the company. You have to view the diagnostics business not as the end goal, but as a Trojan horse.
A Trojan horse. Okay, break that down for us.
Think about the core problem of getting medical data. You can't just call up a hospital and say, hey, send me all your patient records so I can train my new AI model. They will laugh at you.
Or their lawyers will sue you into oblivion.
Exactly. Or their IT guy will tell you it's impossible because their database was built in 1995.
Right. The data is locked in a vault. It's fragmented.
Fragmented and heavily guarded.
Oh.
But if you say to that hospital, I am going to run this incredibly advanced genetic test for your cancer patient, it will help you choose the exact right targeted therapy. And I will give you the results in a beautiful, easy-to-read dashboard right inside your existing system. The hospital has to connect with you.
Oh. You offer the clinical service to get the pipe installed.
Exactly. By running the physical test, Tempus earns the right to digitize that patient's record. They aren't just sequencing the tumor in isolation. They are sucking in the clinical history, the medication list, the radiologist notes, the eventual outcomes. The lab test is just the entry ticket.
So the lab is basically a giant vacuum cleaner for medical data. They run the low-margin physical business specifically to feed the high-margin digital business.
Precisely. And that leads us directly to the second prong, data and applications.
This is the smaller slice of the pie.
Smaller revenue, yes.
Yeah.
It's about 25% of the business, coming in at $316.4 million for FY 2025. And this is a massive, but look at the margins on that segment.
I'm looking at the sheet here. 74.5% gross margin.
74.5%. That is elite, pure software-level profitability. The diagnostics business has lower margins because of the atoms, the physical stuff, the couriers, the dry ice. The data business, you are licensing information you already have sitting on a server.
You sell it once, you sell it twice. The marginal cost to replicate that data set is essentially zero.
Exactly. This segment involves licensing that massive library of clinical and molecular data to biopharma companies. It also includes their algos, their algorithmic diagnostics, which we'll discuss later. But the relationship is completely symbiotic. You absolutely need the grunt work of the physical diagnostics to fuel the elite margins of the data business.
Which brings us to the visual that is plastered all over their investor deck, the flywheel. I feel like every tech company has a flywheel diagram these days, and usually it's just nonsense shapes.
Usually just a circle with arrows that means nothing.
Right, but this one actually seems to have hard mechanics behind it.
You really cannot understand Tempus without understanding this specific diagram. It's a four-step loop, and the friction at every single step is what keeps competitors locked out.
Walk us through it. Step one.
Step one is ingestion. We touched on this. Tempus has integrated with electronic health records EHRs in over 5,000 hospital systems.
5,000 systems. I just want to pause on that number for a second. Integrating software with one hospital's EHR is a total nightmare. Doing it 5,000 times is immense.
It is a Herculean IT effort. It represents more than 65% of all U.S. academic medical centers. They are plugged directly into the hospital's brain, so they are pulling in clinical data constantly.
Okay, so they have the pipes installed. Step two.
Step two is the moat. All that ingestion creates a proprietary data set. We are talking about 450 plus petabytes of data.
450 petabytes. I struggle to even visualize that scale. I mean, I have a 1 terabyte drive on my laptop.
It is 450,000 of your laptops, filled with the most complex, unstructured data known to man. It's not just text. It's clinical records, molecular sequencing files, and massive pathology images from 45 million patient records. To give you context, that is one of the largest libraries of multimodal healthcare data in the world.
And when you say multimodal, you mean it connects completely different types of data together.
Yes, and that is the crucial differentiator. Google has text. They can scrape the internet. But they don't have the biological ground truth. They don't have the ultra-high-resolution image of the tumor physically linked to the genetic sequence of that exact same tumor, which is then linked to the doctor's note about how the patient actually responded to chemotherapy 6 months later. Tempus has the connection between all those modes.
They have the complete picture, so they have the data. What is step three?
Step three is applications. They use that 450 petabytes of ground truth to train AI models. These models create what they call smart tests. For example, a test that can scan a patient's profile and match them to a clinical trial automatically. or a test that predicts if a specific therapy will actually work for a specific patient.
In step 4,
The loop. Because they have these smarter AI-driven tests, more physicians want to use them. They currently have over 8,500 oncologists ordering their tests.
because the test is simply a better product, it gives them more actionable answers.
Right. And when more physicians order the tests, what happens? Tempus gets more physical samples, which generates more data, which makes the AI even smarter, which makes the test even better, which attracts even more physicians.
And round it goes.
That is the flywheel. And once that massive wheel starts spinning, it is incredibly difficult for a competitor to stop it. A new startup might have a brilliant AI model, but they don't have the 450 petabytes of historical patient data to train it on. They were starting from zero.
That makes perfect sense. It's a self-reinforcing monopoly on clinical insight.
Okay, let's move to section 2 in our deep dive, the financial inflection point. We mentioned the date earlier, February 2026. Why is this specific moment so important for their bank account?
Because of the profitability pull forward. In Q4 2025, Tempus posted adjusted EBITDA of positive $12.9 million.
And for listeners who aren't CPAs or financial analysts, why is that specific number a big deal? $12.9 million doesn't sound like a fortune for a company valued in the billions. It's nice, but it's not exactly retirement money.
It's not about the magnitude of the number. It's about the direction and the independence it represents. For its entire existence, Tempus was burning cash. They were actively losing money to fund their growth. Wall Street analysts had modeled out that they wouldn't hit profitability until late 2026 or maybe even 2027.
So they beat the clock by a full year. They beat the clock. And that changes the company's risk profile completely. When you are burning cash, you are entirely at the mercy of the capital markets. If the stock market crashes or interest rates spike and you need to raise money just to keep the lights on, you can go bankrupt.
You're begging for a loan in a bad environment.
Exactly.
Yeah.
But now, they are self-sustaining. If the stock market crashes tomorrow, Tempus doesn't need to raise a dime. They can fund their own operations from their own cash flow. They have graduate status.
That is a massive relief for investors, I'm sure. Let's look at the top line, though. The revenue is absolutely exploding.
It really is. Fiscal year 2025 total revenue came in at $1.27 billion. That is an 83.4% increase year over year.
83% growth. That is early-stage tech startup numbers, not massive infrastructure numbers. Usually when a company gets past $1 billion in revenue, they slow down. They grow at maybe 10 or 15%.
To be fair, we do have to nuance that figure slightly. A chunk of that 83% growth came from their recent acquisition of Ambry Genetics. So they did buy some of that revenue.
Okay, that's a fair point. So they bought a company to boost the top line. But what was the organic growth? If you strip out the Ambry acquisition completely.
It was still a robust 33.5%. So even without buying Ambry, their core business is growing at over 30% a year at a billion-dollar scale. That is very impressive. It shows the core engine is healthy, not just their mergers and acquisitions department.
And looking forward to 2026, what is the outlook?
The guidance is incredibly strong. They are projecting roughly $1.59 billion in revenue for 2026. That is about 25% growth on top of the massive 2025 they just had. And they are targeting adjusted EBITDA of around $65 million.
So profits are going up 5x, essentially.
From $12.9 million to $65 million, yes. But here is the truly fascinating part. I want to highlight something the management team said on the call about where that money actually goes. Because a lot of investors want dividends. They want stock buybacks.
And Tempus is saying no to that.
Correct. They established this two-thirds rule. They explicitly told investors, look, we are going to be profitable, but we aren't going to hoard all the cash or hand it back yet. They plan to reinvest 2/3 of every incremental gross profit dollar straight back into the business.
Back into the A.
Primarily AI and physical infrastructure. They're buying more GPUs, they're hiring elite data scientists, they're building out new foundational models, they're letting 1/3 of the profit flow to the bottom line to keep Wall Street happy and prove they have financial discipline. But they are using the vast majority of their winnings to make the moat even wider.
That is smart capital allocation. They aren't resting on their laurels. They are feeding the beast. It really signals they see a much bigger market opportunity ahead than just being a profitable testing lab.
Exactly. They're playing a very long game.
Okay, let's talk about security. Not data security, but revenue security. Section 3, the data fortress. I keep seeing this specific number in all the reports. $1.1 billion.
The backlog. This is probably one of the most bullish metrics they have in the entire deck.
Break that down for us. What does that 1.1 billion actually represent? Is that just, hopes and dreams of future sales? A pipeline estimate?
No, it is much firmer than that. That is the total contract value, or TCV.
Mhm.
Essentially, it is money that customers have legally signed a binding contract to pay Tempus in the future.
So it is locked in.
Highly visible. They haven't done the actual work to fulfill those contracts yet, so they can't count it as recognized revenue today. But the ink is dry. And specifically, $350 million of that backlog is already scheduled for delivery in 2026.
That's amazing. They start the fiscal year knowing that $350 million represents checks that are basically already in the mail.
It gives management incredibly high visibility. They aren't waking up guessing if customers will show up this quarter. In a volatile macro economy, knowing where 25% of your targeted revenue is coming from before you even have your coffee on January 1st is a massive luxury.
And who exactly are these customers? We talked about the diagnostic side being ordered by individual doctors, but the data side,
Yeah.
this is big pharma, right?
It is the absolute who's who of biopharma. 19 of the top 20 pharmaceutical companies in the world are currently customers of Tempus.
19 of 20. That isn't just a good market share. That is absolute market dominance.
And they aren't just staying on the platform. They're spending more every year. This brings us to the net revenue retention number, or NRR. It's currently sitting at 126% for their biopharma sector.
Translate that metric for the listener.
It means that if a pharma company spent $10 million with Tempus last year, this year they are spending $12.6 million. They didn't churn, they didn't cut back their budget, they actively increased their spend by 26%.
That screams addiction, or at least absolute necessity.
Necessity is the right word. You have to understand the immense pressure these pharma companies are under right now. Developing a single new drug costs billions of dollars and takes a decade. And the vast majority of them fail in clinical trials.
Because they can't find the right patients to test it on.
Exactly. Or they design the trial wrong from the start. They select a broad group of patients who are never going to respond to the drug because of their specific underlying genetics. But the pharma company doesn't know that yet because they don't have the data. They need Tempus's massive data set to design better, highly targeted trials and find the exact patients with the specific genetic mutations that their new drug targets.
So it is not a luxury software item for them. It is the literal map they need to navigate the drug discovery process.
It's the map in a high-stakes gold rush. And Tempus is sitting there selling the map, the shovel, and the pickaxe.
I love that analogy. Okay, let's get into the weeds a little bit here. Section 4, the pricing power moat. This is where it gets really interesting for the finance nerds listening. We need to talk about ASP.
Average selling price.
Right. Now, usually for a company to make more money, they have to physically sell more widgets. But Tempus found a way to just charge more for the exact same widget. Explain the XT-CDX catalyst to us.
This is a total masterclass in regulatory strategy.
Yeah.
So Tempus has a flagship diagnostic test called XT. It is a solid tumor test. It sequences the tumor's DNA to find actionable mutations.
Standard precision oncology procedure.
Historically, they sold this test as an LDT, a laboratory-developed test. The reimbursement rate for that, meaning what the insurance company or Medicare actually pays them to run it, is roughly $2,900.
Okay, $2,900 per test.
But Tempus went through the grueling, expensive process of getting full FDA approval for this specific test as a companion diagnostic, or CDX. So it's now marketed as the XT-CDX.
It's the same test, though, physically. Like, the chemistry in the lab didn't change.
Physically, it's very similar. Same basic chemistry, same physical sample.
Okay.
But regulatorily, it is now considered the absolute gold standard. It is legally certified by the FDA as necessary for prescribing certain targeted drugs. And because it has that official FDA stamp of approval, it qualifies for ADLT status with Medicare.
Okay, too many acronyms there. What does ADLT status actually mean for the bank account?
It means the reimbursement rate jumps from roughly $2,900 to $4,500.
Whoa, that is a $1,600 raise per test just for having the paperwork and the clinical validation in order?
It is immense. It is pure margin expansion. The physical cost to run the test in the lab did not go up by $1,600. That price bump is almost entirely gross profit falling straight to the bottom line.
And how fast are they switching doctors over to this new version?
Very fast. By the end of Q3 2025, they had already migrated 30% of their testing volume to the new FDA-cleared version. Their stated plan for 2026 is to move the vast majority of the remaining 70% to that higher price point.
So when we see their revenue growing so fast, it's not just that they are finding more cancer patients to test. It's that every single patient is suddenly worth 50% more to them than they were 2 years ago.
Exactly. This regulatory shift drives their overall oncology ASP, their average selling price across the division from around $1,640 historically toward a stated target of over $2,200 across the whole portfolio.
It is pricing power. It is something very few companies actually have in the healthcare sector, where usually, Medicare tries to pay you less every year.
Correct. The government usually squeezes margins. Tempus engineered a structural way to get paid significantly more. It's a critical part of the profitability story we talked about earlier. It's really the magic trick of their financials right now.
Let's pivot to the shiny object. Section 5, AI innovation. Tempus literally has AI in its name now. It's not just Tempus Labs anymore, it's Tempus AI. Is that earned, or is it just clever branding for Wall Street?
It is definitely earned. They are doing things in the clinic that go far beyond basic machine learning. Let's talk about the Oncology Foundation model.
This is the big partnership with AstraZeneca, right?
Yes, AstraZeneca and Pathos. They aren't just training a language model to read a patient chart and summarize it. They are trying to build an expert clinician at scale. They are using a massive cluster of computing power for this, over 1,000 H200 GPUs.
H200s, those are the absolute heavy hitters from NVIDIA.
The top of the line. And why do they need that much compute power? Because they are feeding this foundation model all that multimodal data we discussed. The text records, the genetic sequences, the high-res images. The ultimate goal is to create an AI that understands cancer treatment pathways better than any single human oncologist ever could. An AI that can look at a patient's incredibly complex history and say, based on 45 million other records, this exact treatment is the one that will work.
That really is the holy grail of precision medicine.
It is. And they are already deploying pieces of this technology today. Look at PagePredict. This is their digital pathology tool.
This one actually blew my mind when I read the source material. Explain how PagePredict works for you, the listener, because it honestly sounds like science fiction.
So traditionally, to find a genetic mutation in a tumor, you have to take a physical piece of that tissue, grind it up, extract the DNA, and run it through a sequencer. It takes a lot of time, and crucially, it consumes the sample. If you only have a tiny needle biopsy from a lung, you might physically run out of tissue before you find the answer.
Right. Which means you can't test for anything else.
Yeah.
And you wait weeks for the result.
PagePredict changes that. It takes a standard microscope slide, an H&E slide, those pink and purple stained slides you see in high school biology textbooks. It scans the image of the slide. And just by looking at the shape and the spatial patterns of the cells, patterns that are way too subtle for a human pathologist's eye to catch the AI, can predict whether a specific genetic mutation is present.
It predicts the underlying genetics just from the picture, from the morphology alone.
Yes. It can predict 123 different biomarkers directly from a simple image.
That is magic.
It feels like magic. But it's just incredibly dense data correlation. It means you can get molecular insights without destroying the precious tissue sample and without waiting 3 weeks for a sequencing run. It essentially creates molecular data out of thin air, or rather, out of pixels.
And then there are the algos, the algorithmic diagnostics.
Right, this is where they turn data into a deployable medical device. Take the ECG-AF algorithm. Atrial fibrillation is a heart condition that causes strokes. It is notoriously hard to catch because it comes and goes. You might have a perfectly normal heartbeat when you are sitting in the doctor's office, but an hour later at home, you go into AFib.
So the doctor completely misses it during the checkup.
Exactly. Tempus developed an algorithm that looks at a normal, standard 10-second ECG reading. And it can see that goes to the AFib. It can predict that you actually have the condition, even if your heart is beating perfectly normally right at that exact second.
It sees the structural microchanges caused by the disease before the active disease shows up on the monitor.
Correct. And then there is HRD-RNA. This uses RNA expression to detect homologous recombination deficiency better than standard DNA tests can. It is actively finding patients who qualify for life-saving PRP inhibitors who would have been completely missed by traditional testing.
And then the workflow tools, TIME and NextT.
These are the programs embedded right in the EHR. TIME automatically matches patients to clinical trials in the background. NextT monitors care gaps. It pings the doctor and says, hey, this patient hasn't had their follow-up scan yet, or this patient now qualifies for this newly approved therapy. It acts as an active, always-on clinical assistant.
It is incredible stuff. But, and in these deep dives, there is always but let's play devil's advocate for a minute. Section 6, market risks and the vibe coding defense.
The skepticism. Bring it on.
I hear this argument a lot in tech circles. AI is just software. Why do we need a massive company like Tempus? Can't OpenAI or Google or, some brilliant kid with a laptop just build a foundation model that does all this? Can't they just vibe code a purely software solution to healthcare?
This is the pure software thesis, and in many other industries, it is entirely true. If you are writing marketing copy or generating graphic design images, pure software wins. But in healthcare, Tempus has a defense that I like to call the atoms versus bits defense.
Atoms versus bits. Explain that concept.
You cannot code your way to a physical blood sample. To get the proprietary data you need to train the AI, you need physical access to the actual patient. You need the wet lab. You need the million-dollar sequencing machines. You need the massive logistics network to transport the tumor from a hospital in rural Ohio to a lab in Chicago on dry ice.
So the physical infrastructure, the delivery trucks, the CLIA-certified labs, the specimen mailers, that is the actual moat.
It is the gateway to the bits. Google can build a fantastic algorithm, but they do not have the 450 petabytes of proprietary patient history because they do not have the physical labs processing the samples every day. They don't have the atoms. Tempus has the marriage of atoms, the physical sample, and bits, the software analysis. You absolutely need both.
So unless the vibe coders are going to go out and build a fully regulated laboratory network, hire 1,000 phlebotomists, and spend a decade negotiating data contracts with 5,000 individual hospital systems, they literally can't compete.
Exactly. Data access is the hard bottleneck here, not code capability. The code is relatively easy now. The real-world logistics are incredibly hard.
That is a really strong argument. It's like saying, sure, you can design a faster engine on your laptop, but I own all the gas stations and the oil refineries.
A great analogy.
What about the other risks, though? I noticed something specific in the earnings call transcript about them deliberately slowing down their MRD testing. That seemed really odd. Usually Wall Street wants growth at all costs. Why throttle it?
This actually shows incredible management discipline. MRD, minimal residual disease testing, is a massive hot area right now. Tempus could easily be doing 20 times the volume they are doing today.
So why aren't they running those tests?
Because the Medicare reimbursement isn't fully there yet for broad populations. They're waiting for broader coverage guidelines from MolDX, which is the Medicare program that sets the payment rules. If they ran all those tests right now, they would lose money on almost every single one.
So they are actively refusing to do profitless prosperity.
Exactly. They are prioritizing margins over vanity metrics. They are telling investors, we will ramp this volume up aggressively when we actually get paid fairly for it. It can be frustrating for momentum investors who just want to see the revenue line go up at any cost, but it is the responsible thing to do for the long-term business model.
It proves they are serious about protecting that new profitability target. They aren't just chasing the hype cycle.
It really does. It shows operational maturity.
All right, let's bring this deep dive in for a landing. Section 7, the final verdict. How is Wall Street reacting to all of this transformation?
The reaction has been very positive overall. The current rating from Mizuho and several other major desks is a strong buy.
And the valuation? Is the stock too expensive right now?
It has actually become much more reasonable recently. At its peak back in 2024, Tempus was trading at roughly 17 times forward sales. That is very expensive. It was priced for absolute perfection. Right now, it is trading around 6.5 times forward sales.
So the stock is cheaper than it was, but the underlying business is fundamentally stronger.
Much stronger. They have successfully transitioned to a self-sustaining financial model. They have secured the proprietary data via the Flywheel. They have secured the future revenue via that massive backlog. And they have secured the margins via the ASP expansion we talked about.
It feels like the checklist is pretty much complete.
It is a very robust setup for the next few years.
My ultimate takeaway for you, the listener, from this deep dive is that we finally see what precision medicine actually looks like in practice. For years, it was just a buzzword, but it turns out it is really just a massive data logistics problem.
That is a really great way to put it.
It is about moving complex information from a physical tumor to a database to an AI model and then to a doctor's iPad in time to actually save a life. And Tempus seems to have built the physical and digital pipes to do exactly that.
I agree completely. And if we connect this to the bigger picture to close this out, I think we're seeing the fundamental shift of medicine from diagnosing to anticipating.
What do you mean by that?
Right now, standard medicine is entirely reactive. You get sick, you show symptoms, we test you, we treat you. With tools like the ETGAF algorithm or the care gap monitoring, Tempus is trying to move the entire healthcare system to a place where we anticipate the problem before it becomes a crisis. That is the true structural promise of AI in healthcare. It is not just doing the old job faster, it is doing a completely new job entirely.
That is a fascinating thought to leave us with. We have gone deep on the flywheel, the financials, and the future of the healthcare OS today.
Risk defined, portfolio protected.
There it is. Thanks for listening to this deep dive into Tempus AI. If you want to see those exact flywheel diagrams or the earnings slides for yourself, check the show notes. We've linked all the primary sources we discussed.
Definitely worth a look if you want to see the data.
See you next